Welcome to Surgeon Syndicate. If you're paying attention, you know that you only make money when you work. It might be great money, but it's dependent on you. The information on this podcast will help you solve that. We interview experts and provide analysis into financial freedom through commercial real estate. Why? To help physicians like you thrive. Let's dive in.
Welcome to Surgeon Syndicate. This is your host, Dr. Michael McManus. And today we are here to talk about mixed-use developments. This is a term that I've had some people ask me about recently, and just wondering what that means. So we're going to dig into it a little bit. For those of you watching on YouTube, you'll see a different background here. We're in the process of packing up for a big move to Utah. And it's just another thought as I talk to doctors about stuff like this. There's a lot of concern about what am I doing here? And I don't know. And we get so used to being the experts. Talked about this before. Sometimes it's hard to come out of your comfort zone. And, here with the podcast, I never thought like what happens while we're on the move if we still need to have episodes coming out. So, you do the best you can and you get it out there. And for most people listening to this, they won't really notice much difference at all between what the background we typically have and what we have today. So anyway, mixed use developments are something that's growing in popularity with changes in urban living. Now, traditionally, mixed use would be something you'd find in a downtown. And this would have been areas where you had a store on the first floor and then some apartments on the second floor. So the mixed use indicates that you have a mix of asset classes, and that would basically be retail and mixed with residential. But there are some changes to that basically anything that has multiple asset classes could be considered mixed use. So really what we're going to do today is we're going to delve into some of the different types of mixed use developments. We'll talk about some of the changes in the market and what is driving those today, opportunities that are out there in the mixed use space today, some of the challenges, risks, especially with newer mixed use development. And then we'll do some strategies for success in this field and looking a little bit at the future, at least try and delve out as far as we can to try and understand what's going on in the mixed use space. So let's keep going here. So basically mixed use, most commonly, again, is a residential and retail, but it can also be mixed with commercial and recreational all in one space. And I say space because there's some different types. Typically, when we look at mixed use, we're talking more vertical. This would be different stories of the same building with different uses on different floors, but can also be a horizontal mixed use where you have different things going on the same site, but they're all kind of planned to be in the same place. The benefits of mixed use developments are really enhanced convenience for the people who are there, making better use of that space, and building more vibrant communities. This is kind of moving away from what was really going on back around the turn of the century. It's funny to say that, but where it was more a development of suburbia, where you had all your retail in one place, and then you had another big area where people lived, another place where people worked. And now we're starting to see kind of a move back to an era before where you have more of a community and people can do all the things, live, work, play, all in the same area. Over time, we may see this change some more. It's something cities are starting to get involved in with their urban planning and zoning laws. And so this will continue to move forward. This is something that we've seen really with suburban office this has kind of been a hot space, small suburban office where big downtown office has still been struggling post-pandemic. But the suburban office is more in this mixed use space where people can go to work. They're typically closer to home. They don't have a big commute. They want to get out of the house to work, so they don't want to be working in their home. But then when they want to go to lunch, they have places to eat that are close by, places to go get their dry cleaning that are close by, and that you're not running all over town. That saying of running errands looks to go away a little bit more when we get into a planned mixed use community because things are much closer. But when we look at mixed use buildings as investors, you could have mixed use where there's lots of mixed use around it, or it could be in and of itself. What drives this? I think the biggest driver, one, the pandemic was a big thing that is driving some growth in the mixed use space. But there had been a movement in this direction of building more communities anyway. And so this is still going on. And as you see land costs go up, especially in closer to downtown or in metro areas that are really booming, like Denver or Austin, combining all of this together and a lot of times makes a more profitable and more efficient use of the land that's available. And we're starting to see some different designs. You know, the classic mixed use is that two-story building, like we talked about, retail on the bottom and apartments up above. But as time goes on, this will change a little bit, where you start to see some different iterations go on. I've seen some buildings that had living spaces above industrial, but a lot of these were, from a zoning perspective, were non-conforming, and that somebody had just kind of built a living space above their industrial on their building where they were living. So that's one that, depending on what somebody wants in a new mixed use, may be affected by zoning. Most of the old mixed uses, that's not so much an issue. So what are the opportunities in mixed use? You know, a lot of the time, these are buildings you can get really on the cheap for old mixed use buildings. Why? Because they mix asset classes, and a lot of people just work in one asset class. So people who are buying small residential or small apartments, mixed use building may have one apartment upstairs, it may have 5 or 6. But the people who rent apartments, and they look downstairs and there's a store, and they're like, I don't know what to do with retail. I don't do retail. And then the people who do retail buildings look at tenants up above, and they're like, the last thing I want are tenants. I don't want residential. I just want to deal with businesses. And so sometimes nobody wants to own one of these buildings. And for the people who are willing to figure it out, it can be very good as far as your return on investment. And actually, what some of the people I know will do is, if you're more in the retail space, is they'll manage their retail, and they'll have a property manager do the stuff upstairs. Or you could partner with somebody who's a multifamily person, and you kind of stay in your zone, but get the benefits of getting a building on the cheap. You know, the other side is it does give some diversity if you're running both, where if you have changes in the commercial market versus the residential market, they may not happen at the same time. So there's a potentially some benefit there for diversification. I think in this case, it's one of those where people like to talk about diversification because it's, always the thing in investing. Where most people in real estate, especially if you're active, are more sticking to a smaller area where you really know what you're doing. So how does this enhance the property value? Like I said, typically with these are more that you're able to buy them on the cheap and make better returns. The potential to do a value add, if you're looking at what can you get on the sale, is where it'll take a little more creativity to convince buyers that you can sell this at a lower cap rate rather than the initial cap rate. Now, there is a potential here, if you've got all the management set up, to move this along to somebody who then doesn't have to worry about managing mixed use, because that's already set up. And if they're a passive investor, and there's some people who want to be basically passive owners, active owners, but passive investors. What I mean by that is they like owning smaller buildings or bigger buildings, depending how much money, by themselves without being part of a syndication, but they don't want to run it. So they may have a commercial broker during their leasing, or a leasing agent if it's residential. So at the same time, to somebody like that, they typically will buy at lower cap rates because they just want it to be easy. And if you took a mixed use that wasn't set up to make it easy for somebody and was a very active investment, and turned it into somebody could own more passively, I just use that term passive as far as how much work they're putting into it, then you could probably sell that at a lower cap rate, because all the work has been done, and the people who are looking for a low work ownership can just jump right in and take off. So what are some of the challenges and risks? We touched on some of these a little earlier. Zoning complexities. Typically, if it's an existing building, that's not such an issue, but sometimes it can be. Or if you're looking at a building that's never had a residential and then it's always been retail, rezoning might be part of the deal with this. And sometimes that can be the value add. If you've got a property that had always been, say it's a downtown that never had living spaces, and now from a retail perspective, there's not the two-story J.C. Penney's downtown anymore, that it could be better used, for one-story shops and then apartments above. And this is like a land entitlement deal where you're getting a building and a lot of the work that's going on is changing its use. So if you've never done something like this, where do you start? This is really where you'll engage with an engineer. You'll need a lawyer, you may need an architect, but typically the engineer would be a good place to start because they're going to understand a lot of the zoning stuff and can probably help make recommendations on putting together the rest of the team if this is something you're trying to do for the first time. Now, some people are like, wow, you're diving into a development of something you've never done. Isn't that risky? It kind of depends on how you look at that. When I look at something that I haven't done, and it adds that risk. I say, what learning is there for me to do here? If everything doesn't go well, what am I going to learn in that? What's the value of that in the future? So if there's a big learning and potential for success if it goes well, but even on the downside, you learn, to me, that's a de-risked project. And sometimes if you're trying to re-entitle or change the use of an older building downtown, you can get the building super cheap and get grants from the city. So it can take a lot of the financial risk out and leave you the benefit of either a successful project and learning, or even if the project doesn't go so well, you get a lot of learning out of it that leads to profits on further projects down the road. So again, some of this, the regulatory hurdles, the strategies you take is a lot. This is one that's probably good, not just to involve your engineer at the beginning, but to talk to the city council, talk to the zoning commission, talk to the city planner, find out what they would really like to see. And if this sounds like an interesting thing to you, and there are places that the people at the city say, we would love to have this higher density mixed use in this part of town. Now, when you go through and you start doing this work, instead of fighting with the city, you're all on the same page and trying to get to the same place. What are the costs of doing a project like this? That varies. It's funny, as I was doing some research, a lot of it talked about these being higher cost because they were different stuff and there was more required up front. Like I said, typically what I found is if it's existing buildings, you're getting these really on the cheap. And that's part of the real draw to it. If you're building it ground up and you've never done development before, that's probably something you need to really dig in and do your homework on. If you're investing passively with somebody doing a deal like this, there's part of making sure they understand and that they've done both retail lease ups and residential lease ups. And if the developer hasn't done it, whoever's going to own it, whoever's going to be the leasing agent for these different parts, has the experience to do that. Financing strategies, sometimes you may have to look around on a deal like this. That meaning that some banks may not like it. They often will have had a meeting where they say, we want to invest more in retail, or we want to invest in industrial, we want to invest in self-storage, we want to invest in multifamily. And they're looking at these specific classes. When you mix them, they may say, oh, it's a no-go. Now, at the same time, there could be promotions from the city or the state if this is an area for redevelopment. And often the hometown banks and regional banks, especially if it's a highly visible area in a part of town that everybody would like to see revamped, will love to loan on these projects, put their sign there and kind of say, look, we are part of bringing back your community and we love this. So from the financing, as we've talked a good bit about the management. Again, the difference here is typically your commercial leasing agent. A lot of your commercial leasing agents, actually, they specialize too. So they may do just retail, they may do just industrial. And typically those people don't do any multifamily management, so they're completely separate. So again, the point is sometimes if you're building out this team, if you're going to have different people managing it, it can add to your cost because you're having to have two people involved. But at the same time, if you're already involved in one of the mixed use, you can hire out the second if you don't feel comfortable managing that part yourself. So again, this is if we kind of look through building our strategy for success or our plan here, start out with your plan of what you're going to do with the building, that you see a use for it. This creative problem solving is really where people make money in the mixed use space, is that you see the benefit of this building that may be getting overlooked. And as you make that plan or you get that vision for what you want to do with it, what's it going to take to get it there? If it's just a building that's been, unloved or mismanaged, it may just take the work of bringing it up, making improvements, making it visually more attractive, and marketing it. If you're changing the use and it's going to take a little more work, that's where you got to get into your stakeholder involvement, engage the community, engage the city, and get them on board with what you're doing here. Again, partnerships like we talked about. If you don't have a lot of experience in one of these areas, but you do in another, finding a partner. If you're newer to real estate and you say, you know what, I like these buildings and I want to own one. And one of my mentors, this is really part of what began his real estate journey, was one of these types of buildings, and some of the learning that could go on because it's mixed use. And if you're doing different stuff, so we've just talked a lot about our typical retail and residential, but if there's also some sort of recreational or industrial point of it, you're going to meet a lot of people as you build your partnerships and collaborations here. And so this is another one that I think these are a great opportunity to do some learning and may find opportunities you didn't know existed before. So look into the future with these. Again, I think it's a great area where often you can find unloved buildings that were missed by people who focus on a sole asset class. And they can be very, very profitable from that standpoint because the buildings will come cheap. As you look at your exit, is where then if you're planning on holding it for a shorter term, you really need to have a plan, because selling it, you may come up in the same spot where there's not as much interest because of the mixed asset classes. Now, if you find a way that you can figure out how to rebuild this building or reposition it for use and make it easier to sell, there could be a lot of value added in that you're buying it at a high cap rate and able to sell it at a low cap rate. But that's part of having a plan. And for mixed use, in every community, every building are going to be different. So there's a lot of opportunity here for creativity. But at the same time, it's going to be a really hard one to have a cookie cutter where you punch it out and do them all the same. So I hope this helps. It's just something I've had people asking about, and I wanted to go over a little bit. If you have any questions, you'd like to talk about mixed use or anything involving real estate, reach out. You can go to surgeonsyndicate.com, book a call. Let's talk. I think we got some great investment opportunities coming up here. I'm starting to see a lot of stuff come through with some really quality sponsors with some really great returns, and they're looking for capital. So if you've got money you want to invest in, the time's right for you. Give a call, let's talk, and let's see what we can figure out to help you move down that road. So I hope this has been helpful to you and added value to your day. Thank you for joining us here on Surgeon Syndicate, and we'll see you next time.
This has been an episode of Surgeon Syndicate. If you got value from this episode, you know other surgeons are hungry to become job optional, and you can help them by sharing this content today. Schedule a call and we can make a plan. Looking forward to having you with me on the next episode.